Hello and welcome to Tax Matters. I'm Chiamaka Ohawuchi. It's celebration time. Value-added tax is 30 years old in Nigeria. Yes, VAT was introduced in Nigeria by Decree 102 of 1993, with commencement of implementation being January 1994. A little bit of history. In the year 1918, German industrialist Wilhelm von Siemens proposed the concept of value-added tax. 4 decades after, precisely in the year 1954, Maurice Lauré, joint director of the French tax authority, known as the Direction Générale d'Impostus, began the implementation of VAT in France. Value-added tax was initially directed at large businesses, but was extended over time to include all business sectors. From that humble beginning in 1954, VAT spread gradually around the world. But in Nigeria, it took another 4 decades for VAT to be introduced. VAT was introduced in Nigeria via Military Decree 102 of 1993, but implementation began in January 1994, and that translates to the fact that, as we speak, VAT is 30 years old in Nigeria. However, VAT in Nigeria had a precursor, the sales tax, which in itself was also birthed by Military Decree 7 of 1986. Sales tax was administered by both the federal and state governments. Beginning from this episode, Tax Matters will be sharing with you the story of VAT in Nigeria, the journey so far. We shall be speaking to those who were there at the beginning, as well as those who have had one thing or the other to do with VAT over the years. We shall be analyzing the gains, the successes, the challenges of VAT over the years in the face of the current quest for subnationals to take over the administration and collection of VAT. At inception in 1994, the rate of VAT was 5% and was only increased to 7.5% in the year 2020 via the Finance Act 2019. From inception, VAT has been administered by the Federal Inland Revenue Service, with the FIRS earning 4% as cost of collection, while the proceeds are distributed on a monthly basis amongst the 3 tiers of governments, with the federal government receiving 15%, the state governments 50%, and the local governments 35%. Aside from the 7.5% rate of VAT, some goods and services are 0 rated, while goods and services like raw food, water, children's clothing, educational materials, medical equipment and drugs are VAT exempt. VAT is 30. It's time to celebrate.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
You're watching Tax Matters. We want to continue from where we left off on the story of the stakeholders' engagement organized by the large tax department, oil and gas of the FIRS for oil and gas downstream companies and tax consultants in the northern region, including the FCT. In the first installment, we shared with you excerpts from the paper presentations which set the tone for the robust interactive session that ensued after. As you will find presently, the intervention gave opportunity for the taxpayers to seek and receive clarifications on several matters regarding their compliance with the tax laws and regulations. On the base for calculation of minimum tax.
As regards the alternative minimum tax, particularly in this industry, and when I'm talking about alternative minimum tax, you know, our peculiar nature is such that my turnover will be so huge, but my gross, or what I can call my real turnover, will be so low. Let's say, for instance, I'm dealing with a cargo of crude going into $16 million, and I'm paying about another, almost that, maybe $50 million to NNPC. So I'm only dealing with $1 million. But alternative minimum tax is calculated on $16 million. So it's making a mess of the old tax law. Is FIRS looking into this?
Still on minimum tax.
The oil and gas sector, yes, they have high turnover in trillions. But in actual sense, the cost of sales of that turnover is like 95% of that turnover. At the end of the day, you have a gross profit margin of 5%. By the time you add all other overhead costs, most of the companies in oil and gas downstream, you see them grappling with losses, and you now ask them to pay minimum tax of gross turnover.
On the regulation requiring companies conducting business with SMEs to self-charge themselves VAT if such SMEs fall under the 25 million naira threshold, which exempts them from charging and collecting VAT on behalf of governments.
From the way I'm looking at it now, it's like what you're giving away, you're taking it back. Because you are asking us that, yeah, they don't have to pay, but we have to pay. So the problem here is that I might decide not to do business with them. And that's still not encouraging them. Somebody is below 25 million and you say, okay, you don't have to pay VAT. Then you are asking me because I'm buying from somebody below 25 million, I should pay. So then I have an option of not buying from them.
On audit.
This question is actually for the audit. When audits come, they always insist they want to see receipt for this. They ask they demand for some things at times. I told them, you want me to bring the intestine of my dead mom before you believe certain transaction. They have seen telephone expenses. They say she go and even the recharge card. We all know that it doesn't stay. So I want to plead with you that there are some transactions because of the online transaction. It's just the bank statement that we explain that that transaction took place. But then we insist that not until you bring the receipts, they will not recognize it. And we all know the implication of that. Once it's disallowed, the taxes and the interest and penalties. If a business is doing other things, there probably one or two oil transactions in the area of marginal fees. Are we automatically classifying that business into oil and gas just because there's an element of oil and gas in their revenue? Or how will that be decided?
On Tax Pro Max.
Since it's in-house, it should have human face, or we should customize it to meet our needs. In the area of interest and penalty from tax audit liabilities, you know, tax officer, because of one way tax audit due to one argument or the other, has increased the liabilities of the company. They're coming back to say, okay, you put it on tax performance. So that aspect where tax audit is being imputed, it should not have additional tax liability. If I default in my doing my self-assessment, you can fine me. Please, I want to passionately plead that when it comes to penalties, when it comes to audits, investigation, or debt review, there shouldn't be penalties on that. We should restrict the penalties to self-assessment.
On interest and penalty arising from tax audits.
I just want to understand what the FIRS is doing concerning interest and penalty on audit as it relates to companies' income tax liability. In some jurisdiction, I know when we get assessments from the FIRS, maybe say some offices in Lagos, maybe LTO, So, but getting to Abuja, you see that I think there should be some kind of synergy between the Lagos office and the Abuja office.
Alhaji Rashid Bello is the Acting Director, Large Tax Department, Oil and Gas.
I will start with Mr. Tajuddin. You talk about alternative minimum tax. As of now, there's no provision for alternative minimum tax. What is applicable is minimum tax on turnover. Actually, I sympathize with the downstream company because the margin is small, and the law said the minimum tax should be on the turnover, it's not on the margin. You're not reporting your margin as your turnover. You are reporting your turnover. So, if it's amended in future, FIRS is obliged to obey the law. Then the second one, you talk about self-accounting of VAT for company with threshold of 25 million. VAT is a consumption tax. Whether you transact business with somebody with 25 million or you decide to go and do business with somebody with 1 million, you are still going to bear the burden of VAT because it's a consumption. So what we're saying is that because you are consuming, if you transact with somebody with turnover of 100,000, you pay VAT along with the invoice. But now the person you are transacting business with, he has threshold less than 25, and because of the ease of doing business, they were exempted from the rendering VAT returns. So that's the law, the Finance Act now making mandatory that you should subtract yourself because you know you have that obligation to pay that VAT, which is a consumption. The burden is on you because you're consuming it, so you have to pay it. So that's the provision of the law.
Mrs. Victoria Leby is the Head of Audit, Large Tax Audit, Oil and Gas, Abuja.
The issue of file movements perhaps over two areas. I'm sure the peculiar case the gentleman is referring to, if I might be spoken, it should be that the company name is Oil and Gas right from inception, if you want to tell the truth. And if the file is not in that name, I stand to note which office that is insisting you pay reverse charge. Because why we audit companies that bear oil and gas and yet to operate in oil industry, we deal with them based on their transaction where they are operating. Until they started operating in where they are supposed to make reverse charge. And it's on that note the issue of when you have dual business, general and oil and gas. In practice, what we normally look at now is, are you having about 50% in oil and gas industry? If that serves, then if your file is already in oil and gas, we may not allow you to move it out because there's tendency you might move above that. So it has nothing to do with you. You are being taken, your VAT is taken at source. The bottom line is the provision of documentation. Let's see your documents. Those that are general, separate it to general. When we see that it's general, that you cannot be able to deduct, we will not ask you to deduct. And those that are under oil and gas, there will be an evidence that those subtaxes have been taken at source. I think the issue lies on VAT. If you are on tour, those that are not oil and gas, you are bound to collect your tax and remit. And in such instance, FIRS will demand it that these particular operations are with non-oil and gas. And in that instance, you have the responsibility to withhold and remit. Then the ones that are on the other side of oil and gas, we're going to separate it, that this one has been deducted at source. Then the area of documentation. Oil and gas is a versatile area. They are filled with lots of documents. We separate our documentation to materiality, and I can say that there's no way a company will have expense on maybe recharge cards that are not material, that a professional auditor will be insisting. No. And if you think you have that instance, like we said, let's engage after this meeting. What we normally insist on are material document, material information particularly your assets. You have declared an asset in billion, which will be running to tax reliefs on capital allowance. You wouldn't expect us not to see material document on such instance. But when you are citing recharge card, I find it unbelievable. But if you have that instance, we will look at it.
Mr. Mbamishon Guam is of the FIRS Tax Pro Max team.
Whatever you see on Tax Pro as regarding penalty and interest is based on the provision of the law. The law was amended in 2020 during the 2020 Finance Act, and it was said that at any point in time that you under-declare or you dishonestly declare, your interest and penalty will start counting from the day that you are expected to have done the right thing, and that is from the due date. For assessments before 2020, those ones definitely, the law is clear. It says you've been given 30 days, of which you're expected to pay or to object. It's after the 30 days, the interest and penalty will start accruing. But for any audit or investigation, there is covering a period from 2020 when the 2020 Finance Act came into effect. The effect of the Finance Act amendment as regarding interest and penalty would follow in that pattern, and that's how it has been designed on the system. For VAT and withholding, that is clear. You have 21 days to actually remit those amounts. And if you do not do the right thing, and I know those that amended the law wanted to encourage sanction non-compliance, since we are in a self-assessment regime, encouraging people to declare honestly. If you declare honestly and pay your taxes adequately, you won't have that issue. But when you don't declare honestly, then whatever amount that you're supposed to have paid as taxes would actually attract interest at pro rata basis. That is not Tax Pro, that is the law until it is amended. Issue of support. Tax Pro Max is not supposed to actually interface, particularly the technical team, is not supposed to interface with taxpayers. But in each of the offices, we have people that are called focal officers who handle your tax files and tax issues on the system. But currently, we have developed a new solution now where taxpayers don't need to go to the tax office to actually raise their issues. You can go online through the support platform and raise your ticket, and you will get to the office. Because when a taxpayer needs to leave his business to go to the office in order to resolve an issue, the aim of automation is defeated. So we started with the filing. You don't need to come to the office to file and pay your taxes. After filing, if there are issues and I need assistance, do I still need to go to the tax office? We have also gone further now to actually deploy a solution where you can also sit in the comfort of your house and send your request for resolution of issues, which will be ticketed. A case number will be issued, and you can be able to track, to follow up with your case without necessarily going to the tax office, except if there are exceptional cases that requires your presence.
There was another round of questions and answers. That will be the subject of another day on Tax Matters. Tax Matters spoke to the head of audit, Large Tax Audit, Oil and Gas Abuja, and the Tax Controller, Large Tax Office, Oil and Gas Abuja. Ma, how will this outing impact the revenue generation of the service now and in the nearest future?
The whole aim of stakeholder engagement is to find a forum to interact together, whereby gray areas in tasks are cleared out, so that when people knows what they are expected to do, they could do it on time. And when they are doing it on time, it means they are complying with what they are supposed to do. And when they comply, the taxes will be paid on time. And that will help us in getting more revenue in tax as is expected. It will make it promptly, and it will make it done on time and rightly.
With the unprecedented experience we have today, the turnaround, the engagement we have today, I believe we are going to have more compliance. The taxpayers will go a long way to comply with the provisions of the tax laws in submitting their returns and doing the payment as a due time. I believe we will experience increase in our collection.
Tax Matters also spoke to some participants.
Ma, what's your assessment of the stakeholders' engagement between FIRS and the oil and gas sector, the downstream sector?
Wow, I must say it's really educating. I enjoyed every bit of it. The questions that they asked and the answers they were giving is really interesting. And I have so many challenges on Tax Pro, but attending this kind of event broadened my knowledge.
Fantastic, I must say. The coming of Last Tax Office here in Abuja has actually given the players an opportunity to actually air their grievances, their issues and all that. And prior to this time, where there are issues, you have to relate with people in Lagos and all that. But coming to talk about the downstream companies, of course, most of them have their offices also here in Abuja. It's only normal for you to say, okay, instead of Lagos, let's also have an office here in Abuja to cater for the needs of those persons here in Abuja. Now, from the conversation that transpired, it said to ease business, and I think it's a very, very important step that FIRS has taken. We only wish this will continue to happen.
We started this episode on a celebratory note, and we want to end on a celebratory note. PEDABO Associates, led by Mr. Albert Folorunsho and Mr. Ajibade Fashino, turned 25 2 weeks ago, and they rolled out the drums to celebrate the Silver Jubilee. The occasion was also used to unveil the new status of the firm, which is now part of an international network. Like they say, think local, act global. We want to share with you sights and sounds from the event put together to mark the Silver Jubilee.
1, 2, 3, let's go. Ladies and gentlemen, let's put our hands together. This is beautiful. Okay. Yeah.
Tax Matters spoke to the duo of Ajibade and Folorunsho.
Mr. Ajibade, 25 years, that's awesome. How does that make you feel?
25 years of exciting challenges that we have overcome.
Can we be ambitious, look at another 25 years? How do you see PEDABO Preston in the next 25 years?
Well, an indigenous firm that will be seen as one of the exports of Nigeria. Preston PEDABO, we want to see as a global name, a name that is just not operating in Nigeria, operating throughout Africa, and of course internationally.
How do you see PEDABO Preston in another 25 years?
Another 25 years, obviously, we believe that will be in the hands of those that are coming behind us. We will be here to witness it by the grace of God. We believe that we have laid good foundation for the young partners. We believe that we have shown good examples. We believe that we have set good vision and mission, and as long as they continue to live with those mission and vision, they will be able to survive and surpass even what we have achieved as founding partners.
For those who are aspiring to be like PEDABO at 25, what's your advice for those fledgling companies, startups, whether in the professional sector like you or anywhere? What's your advice?
Okay, you know, PEDABO has been built on the dictum of excellence. So we started out to excel. And so if you are starting out to excel, you do all the things that will make you to excel. You must be very passionate about what you do. You must empower yourself to be able to deliver the services. You must build good relationship with whoever you are rendering service to. Good relationship even beyond the service. You must ensure you are above board when it comes to regulatory compliance, even as you advise your client and even yourself. Your regulatory compliance is critical, and then you must be able to live by example to others.
Mr. Folorunsho is a good friend of Tax Matters, and at the shortest notice answers our call to educate and enlighten our viewers. We can confirm that he is one of the brains behind the Yearly Finance Act. Here is wishing Mr. Ajibade, Mr. Folorunsho, partners and staff of Preston PEDABO the very best in the years ahead. Next is the CITN, which has spread its wings to the United Kingdom. Again, talk about acting global. Inauguration of the UK and DC Society of the CITN was held on the 28th of October 2023. We also seized this opportunity to wish the CITN more grace to her elbow. We are sure that the best is yet to come. Here are sights and sounds from the event.
This occasion represents a significant milestone in the history of our esteemed institute. The establishment of the United Kingdom and DC Society only signifies the institutional growth. You are the first leg we are having outside the shore of the country.
Thank you for watching. Let's roll again next week. Same station, same day of the week, and same time of the day. Bye for now.